Good morning. I hope that you are doing well. Welcome to this week's week review. I hope that you had a nice week in which you got after it and in which you became better. I'm excited to make this week review because the markets delivered exactly like I've been outlining the past few weeks. So it's beautiful to see, and let's begin with Dixie. Here we are on the Dixie weekly chart. What we can see is that market is indeed drawn to the July high, which is where buy-side liquidity was resting. This significant sell-side liquidity was purged and immediately the market reverted higher. When we go to the daily time frame, you see beautiful bullish institutional order flow. What confirmed this idea was an SMT with EU on the lows, while EU reached its weekly volume imbalance. Let's go down into the daily time frame. Here we are on the daily time frame. What we see is that there was this pretty significant liquidity void here during July, this red box, and you see how the market draws to that. It draws higher, but look how efficiently it balances this whole area out. It's beautiful, beautiful bullish order flow. We were first looking for a scenario like this to unfold into a weekly BC, but that did not occur. So if we go on to the weekly time frame again, this weekly BC is still present, but based on the daily time frame, I don't know if we're going to see a retracement into that. For a bullish thesis, I actually would not like to see that, because if that would occur, then I think we're going to shoot straight down through it. And in my opinion, the best scenario for Dixie would be either a scenario in which we see just quick expansion up into this volume imbalance here, into buy side, into volume imbalance, into buy side. Why this buy side? I'll leave that up to your studies. But we have this tiny BC here that could act as a potential draw or short-term draw. So a scenario like this could unfold. But it's still possible that we will just see higher prices from the Sunday opening right away. If we go down into the lower time frames, into H1, and we put the daily range dividers on, we can see again nice bullish order flow into that July high that we've been talking about for a while now. Market trades below the opening price here into what? Into this right here. This is a bullish order block on lower time frame. This is a imbalance here, ABC, ABC here as well. And we then see beautiful bullish order flow into the July high. Notice how on Wednesday here the market just tapped above the July high, but look where the bodies close. Here. Do you see how they close in really close proximity to the July high? For me, that was the sign of okay, the business here is not done yet. So on Thursday, I looked for a retracement into discount of the Wednesday range here into this discount BC, and you see how price respects that. We then see displacement to the upside here. Study the liquidity voids, extend them to the right. We see IOFET here. And continuation to the upside. This was beautiful order flow in my opinion. Then on Friday, we saw that the market again purged the July high, or at least traded above it. displays to the downside, and we have the CB here. Going going into next week, I'm monitoring how price is treating this imbalance right here. Like I said, we have this daily BC here with sell side liquidity engineered here in the form of a trend line that could act as a magnet on price, but it's also possible that we will just see continuation to the upside and completely just utilize this imbalance here as an inversion fair value gap. But right now, just keep in mind we're in the final 2 weeks of August. We have seen clean delivery so far, and it's, in my opinion, not a surprise if Dixie and Euro and GU will just go into a consolidation phase for the remainder of the month. Everything can, of course, just completely change, but if I were to give a higher time frame draw, in my opinion, Dixie is still bullish. Let's go down into Euro. Oh, let me turn this off. Here we are on Euro on the weekly time frame. Here we are on Euro on the weekly time frame. Do you see how Euro respected this weekly volume imbalance? We've discussed this in depth during the previous weekly review as well. S&T on the highs with Dixie, imbalance, IOFET here. Why is this IOFET? Why is this institutional order flow entry drill? You have this CB, market taps it, and quickly trades away. That shows bearishness. What was the market drawn to? This sell side liquidity here. Equal lows inside of ABC. Let's go into the lower time frame. Here we are on the daily time frame. Keep in mind, this is a weekly fair value gap here. The highest red box and this right here are two BCs extended all the way to the right. What I did was I measured or I annotated CE of these two BCs. And CE is measured by measuring the low to the high of the liquidity void. Notice how the market closed at CE of this liquidity void here. And the moment that price broke below it and it closed below it, a retracement occurred, but the market does not need to trade into this CB here. So what does it do? It retraces into what? Into the Friday low and into CE of this liquidity void, and then it distributes lower. Here we are on the hourly time frame. Choppy delivery, so that means that it was slow delivery, but you can still see clear bearish institutional order flow. Note how all the premium arrays are acting as true resistance on price. And now I'm going to annotate something for you that is rather simple, but it will be fun to see. What I'm going to do is I'm going to annotate I'm going to measure what OTE is of every single day. And then you need to study how OTE gets treated the next day. Okay, so here I have annotated OTE for Monday, Tuesday, Wednesday, Thursday. What I want you to see is how the markets retraced all the way into OTE of every single previous day's dealing range and then continued to sell off. Let's begin with Monday. Monday OTE is here. Tuesday, market opens up here at the vertical line. It runs higher into a premium, into this bearish rejection block here. It's a bearish rejection block. It's this candle right here with the long wick with the long tail, and the market sells off. Tuesday, new OTE. Wednesday, the market opens up. What does it trade into? Into OTE, into a D premium, and sells off. Wednesday, measure premium to discount, OTE, market opens up on Thursday, it retraces all the way into OTE, into a D premium, and sells off. Then on Thursday, we measure OTE again, and the market just fell short of reaching it during the Asia session, but it traded into this premium CB here and then continued to sell off. You might think, why is this important? Well, what I'm showing you here is a clear idea of, or a clear theory behind how the market opens up from a power of three perspective at the midnight opening, and it retraces into the previous daily range, and then it continues to sell off. And this works when the market is trending, so it's trending lower. It's in a trending environment. Why is it in a trending environment? Because the market is in a rush to get somewhere into this sell side here. So this is something for you to study of how this how this theory can be applied in trending market environments, because it's something that repeats over and over again from the midnight opening, power of three, due to swing higher, continue to sell off, due to swing higher, continue to sell off, due to swing higher, continue to sell off, due to swing higher, continue to sell off. And because we were bearish, we looked to sell above the midnight opening price. Let's now take a look at Nasdaq. The past few weeks, the amount of precision that or the amount of being in sync that I felt was undescribable. It was like, for maybe for the viewers as well, for the watches of the reviews, etc., it must have seemed like magic, because every single thing I outlined way in advance delivered exactly like expected, and it's beautiful to see. Let's begin with, first of all, I want to say one thing about the weekly time frame. This is something I want you to study, and that is this immediate rebalance here. I mentioned it as well during last week's weekly review, but this was basically the sign of, okay, we're very bearish here. The weekly immediate rebalance occurred here. And this weekly fair value gap here is the draw on liquidity still. If we go down into the daily time frame, I want you to take a look at the following, and it's this. During last week's review, I gave you guys basically two price levels, or at least one price range and one exact price level to take a look at. And that was, first of all, this liquidity void here. I told you that all these BCs here on the left side of the curve should all act as resistance on price. Next to that, I said to you, this long wick here, measure CE of that and keep that on your chart, because it's an important price level. Nasdaq can be bearish when it reaches CE, may even overshoot it a bit and then continue lower. Let's do something fun with this liquidity void here. Let's add quadrants to it. Look at 75%. Precision. Let's go down into H4. Beautiful bearish or institutional order flow from the August open. This is a market maker sell model, which was already called here. That's when the initial chart was sent by Mia. And look how it just beautifully delivered. Every single premium ray is being respected. You can't ignore the precision in that. It is beautiful to see. And going forward, I think that this sell side is the draw. Let's go down into the hourly time frame. Let's put the day range dividers on. Remember, this is CE of that long wick. This price. What's this? It's a bearish order book. Due to swing up, create a high of the week, distribution lower. Again, study how all liquidity voids on the left side of the curve act as resistance on the right side of the curve. What I'm going to do is I'm going to annotate for you during which sessions the market reached these premium rays. New York. We were bearish for the whole week. We were expecting lower prices. How do we utilize that bias? How do we deal with that information, you might be wondering? Think about it this way. We have these higher time frame price levels that we know the market is drawn to. We have these relatively higher time frame premium rays that are inefficiencies. Notice that everything I'm marking up here, except for this last green candle here, this is order book, but everything here is all inefficiencies. The red boxes are inefficiencies. Notice at what times the market reaches those premium rays. Tuesday, New York, market maker sell model here. Wednesday, New York, market maker sell model here. Where? In this inversion fair value gap, in this inversion fair value gap, in this CB here, market sells off, retraces into what? This CB right here during the PM session. New York comes around. Where does New York trade into? Into this order book, into this lower time frame BPR. What does it do? It draws to sell side liquidity. Expands, retraces. When does it retrace? During PM. At what time does the market retrace into this CB? Exactly at 1 PM the market reaches a lower time frame BPR and it continues to sell off. This is a beautiful chart to study in my opinion, because it's perfect bearish institutional order flow. And you might be wondering, Zusi, are you on Nasdaq? Because I used to only focus on ES.